Hello, Behus here, broker with Toronto Real Estate Board, and this video is about the market stats. For the month of May 2022, we had a substantial differences between that month and month before, which would be April, and that month stats and the stats of last year all together. The reason being that we are in a rate hike cycle at the same time as we are in a financial tightening cycle, which was introduced by central bank. The incentives that were in place to help the economy survive over the course of 24 months after the first lockdown of COVID were lifted, and we are now going back gradually to what Bank of Canada is calling it as a neutrality of their policies. So they're going back to what was normal before the COVID hit the country. For that reason, in the past 24 to 26 months, we had seen substantial increase in the desire to purchase and transact real estate. Now, that tightening cycle that I spoke to you is now in effect. First full month that's been in effect is now past us, and we are seeing the effect of that. The same way that it started pouring gasoline on top of the hot real estate market of the Toronto GTA, it's pouring cold water on the market. The result, 30% number of transactions dropped year to date in comparison to the last year. And the prices are back to what it was in October, November of last year. This is May, and the prices are back. This is May with only 0.75% increase in the rates. In June, where last week Bank of Canada, according to the previous meeting that they had, started to bump the interest rates by another 0.5%, and it's expected to increase the interest rates by another 0.5% in July. By the end of the year, we are expecting to see lowest number of transactions seen over the past few years. Sometimes people are quoting it as a 10-year average, sometimes 25-year average, but we know that it's between you and I as a consumer to transact in real estate. So at the end of this video, as I am suggesting right now, for those of you who are in need of real estate, who are thinking that something out there is calling your name to become homeowner, second homeowner, or adding it to your portfolio of investment, today is the best time to buy those properties at the most discounted price that you're gonna ever see. Because we have seen this cycle in 2017, 18, we have seen this cycle in 2008, 2007. So we are familiar with that. For people who are educated, who are understanding the market dynamic, they're educated and they understand these dynamics gonna shape the future of the market, and we are going to more or less deal with this stuff. Now, number of properties that are not selling are going to be injected into the rental market, and expectance of the balance in the rental market is going to come very soon. Now, over the past 12 months, the rental market have been really hot. Now, the reason behind that is that not so many people are moving based on an average yearly basis that we expect people moving. So that is interrupted. At the same time, we have so many people coming to the country and coming to the region that we are in right now. For that reason, rental market is really tight, and the prices of rents going higher and higher. That makes more sense for people who cannot sell their property, and they have the tolerance to expect more and more interest rates in their portfolio to come into the rental market and rent their properties until the dust settles and they can sell it at an acceptable rate of return for the property. So that was the rental market. For the buyers, as I explained to you, it's the best time to buy right now at the most discounted price for the piece of property that you really like. For the sellers, this is a really tight financial market, and financially you're all under pressure. On the buyer side, they're under pressure to get qualified. But on the seller side, me and you are on a daily basis of affording mortgages until the property is sold or until we can discharge a property. For the sellers, we do have properties on the market that are staying more and more, and that is a beacon of light that shows you the amount of danger that you are in right now. I'm gonna go back and tell you that it depends on the neighborhood that you are in right now. That tells you how much in danger you are. Some neighborhoods have dropped, but they have also dropped in number of properties that are available for sale, and you know where more or less the bottom is. But for some neighborhoods, we have so many number of listings, and that's an opportunity for buyers, but for you as sellers, it's a danger for you to come in. However, if you position your property the best that property can showcase, you have no problem of selling it if you have somebody who's helping you navigate the market. Navigating the market of today is significantly different than navigating 2 months ago or past 24 months, which we're always appreciating in the price. Navigating the market of today that's going up and down on daily basis, yes, you've heard it correct, on daily basis, is significantly different than any market that you in your lifetime of home ownership have ever seen. Buyers think about different features of a house today as value than those buyers who are thinking of a different feature as value. And for that reason, you need somebody who can help you to position your property perfectly into what buyers think of value, so you get more eyeballs on your listing and you get at least few offers. This is happening in today's market, and we are gonna bring a really good listing into the market by positioning it well, by the method that we know, that the knowledge has proven to us that we are gonna sell it successfully. So if you need our help, we are here to render consultation for free. Free evaluation, free consultation is available for all of you, whether you are a buyer, seller, or you are looking for a lease in the market. See you on the next video. Have a great day. Bye-bye.